Here is a figure that ought to stop you in your tracks. The European Central Bank is prepared to lend euros to Andorra's central bank up to about 35 million, while Romania's line runs to roughly 4.5 billion. Same facility, wildly different scale. And today, Friday the 7th of August 2026, that facility is being rebuilt for a fragmenting world. It is called Eurep, the Eurosystem Repo facility for central banks. A repo is simply a short-term loan secured against collateral, in this case high-quality euro-denominated government bonds. A foreign central bank hands over the bonds, receives euros, then buys the bonds back later. No begging, no bailout, just financial plumbing. So what actually changed? On the 24th of July 2026, the ECB published its decision to begin implementing an enhanced version of this repo facility, with non-euro area central banks able to draw on it from the fourth quarter of this year. The stated reason is blunt: preparing for geoeconomic fragmentation. Read that as a world where dollar swap lines, sanctions and trade blocks can no longer be assumed to stay stable. Remember, Eurep was born in the pandemic panic of 2020 as a temporary backstop. Widening it and embedding it is an admission that euro funding stress is not a one-off emergency but a standing risk. The ECB would rather lay the pipes now than improvise during the next scramble. Why should you care? Because this is how a currency becomes a genuine reserve currency in practice. Households and firms in Bucharest, Belgrade or Tirana borrow in euros. If euro funding dries up, their local central bank needs a credible source, otherwise lending seizes and mortgages and business loans reprice fast. The tiering tells you the ECB is sizing lines to real exposure rather than politics, from that 4.5 billion for Romania down to 35 million for Andorra. Meanwhile, inside the euro area, excess liquidity is steadily draining as crisis-era loans roll off, and policymakers are openly weighing a rise in minimum reserve requirements from 1% to 2%. Less spare cash sloshing about makes reliable backstops matter more, not less. So where is this heading? In the near term, watch the fourth quarter launch and, crucially, which central banks actually sign up, because take-up is the real test of credibility. Expect the terms to stay deliberately unattractive in calm markets, so this remains an emergency tap rather than a cheap subsidy. Watch the parallel plumbing revolution too. The Bank for International Settlements has just completed real value testing on Project Agorá with 28 firms, dragging tokenized cross-border payments from theory towards operations. And do not confuse any of this with headline policy rates. India's central bank held its repo rate at 5.25% this month. That is a policy lever. This is a lifeline. Here is the takeaway worth remembering. The ECB is not grabbing headlines with a dramatic rate move. It is quietly wiring the euro into the global financial grid, so that when the next shock lands, euros are available outside Europe without a phone call to Washington. Facilities like this are boring right up until the week they are not. If you hold euro assets, bank with an institution that funds itself in euros, or simply care about where the next crisis gets halted, put the fourth quarter of 2026 in your diary. The unglamorous plumbing is where financial stability is genuinely decided.